The following is a presentation of TFNN.
11 seconds. Let's go to Ilka in Boston. Ilka, thanks for calling. Thanks for holding.
How are you?
I'm doing wonderful.
Steve, seriously, you guys are unbelievable. You are doing wonders for all the traders.
Well, thanks. We appreciate that.
The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the January 6th marvelous Monday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools, well, just simply the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that's what it's all about. So let's go look at one of our tools. This is the tool I call enjoying true success. You know, the key to enjoying true success is to respond instead of react to life. Because when you respond versus react, guess what? Life will start responding to you. Think about that. Respond versus react. You know, when we trade the markets, respond to your signals. And the markets, well, they'll start responding to you. Life has this way of reminding us that the things that are easy to do, guess what? They're also easy not to do. My favorite expression, the one that I think I've coined, is that successful people always do the things that unsuccessful people don't. So as we begin our new year, and for many of you, you're just really joining us back from the holidays. Hope you had a great holiday, a couple weeks off, a little bit of time to rest, of course. If you've been traveling during the past several days, maybe the last week or so, it's been a little bit burdensome, a lot of cold weather, a lot of wintry weather around, but hopefully everybody has made it back safely, and we're going to begin our 2014 together, and many of you may have some New Year's resolutions. Remember, successful people always do the things that unsuccessful people don't. After all, the only thing that life asks of you and I, the only thing that it asks of us is that we make measurable progress in a reasonable time. So whatever goal it is, whatever outcome you've set up, just make sure you're trying to make measurable progress in a reasonable time, and then, guess what? You will stay on track. So begin your day, begin your week, begin your month. Hey, how about this? Begin your year. How about your life with a dream? That's what resolutions are really, or should be, all about, because your dreams, they are a direct projection of the kind of life that you want to lead. You know, when you allow your dreams to pull you forward, guess what? They unleash a creative force that can overpower everything that gets in your way. So, folks, it is 2014, January 6th, of course. Enjoy your true success. You're going to have it this year. Live your dreams. Let that be you. Well, let's go check out these markets out here. Dow futures right now, they're trading out at 16,456. That's up 49 points from the close on Friday. S&P futures up 5 points. They're trading out at 1830.75. NASDAQ futures up 1 point. That's the week dog. We're going to take a look at each of the futures contracts out here. That's up a point, trading out at 35.32. Russell 2000 futures up a couple of points right now. King dollar up in nickel. Relatively flat market in the currency. Looks like Canadian dollar might have the biggest movement. South African rand. Goldilocks is trading up $1 right now. Just like in trading places, right? $1. It's trading out at $12.39.60. Silver back 6 pennies, trading out at $20.15. Light sweet crude is up 13 cents. It's trading out at $94.08. A quick peek around the globe. Let's see what we have here. A sea of red last night in Asia. You had the Nikkei off 382 points, over 2% to the downside. Hang Seng off about 0.6%. It was down 133 points, down nearly 2% here. 1 3/4, 1 8/10% was the Shanghai. It was down 39 points, closing at 21.41. Over in Europe this morning, the DAX is trading up 26 points. The FTSE up 15. So where do we begin? Well, Let's go check out the week link out here, because it truly is the weakest of the four. Now, we're looking at the 120-minute charts here for the NASDAQ futures. Now, when it was making that low, by the way, that was a Ben Bernanke farewell low. That was down on 2:30 in the afternoon on December the 18th. So I see a nice little 1.272 butterfly as it was making that low. Coming into the price level of about 34.15.25, you might say, hey, what is a butterfly pattern? I'm glad you asked me that. It's where we have an expansion of swing points. You might say, well, shoot, what's a swing point? It's where you start to see a change in trend in the marketplace. Here, we had the NASDAQ futures. They were moving lower into about the time frame of 11:30 in the evening. That was on December 15th. That was shortly after the release of some PMI numbers in China. I remember because I was sitting at the screen watching that thing take off to the downside on a 30-minute chart. Makes a nice retracement, makes a nice reversal, gets up to a high at 11:30 in the morning on December 16th. Then it makes a newer, lower low. That was the expansion of your swing points. That's your swing point low that came in at 11:30 in the evening on December 15th. That was out at 34.29.50 all the way up to the high. That was put in at 11:30 in the morning on December 16th. If you took the distance of that, multiplied it times 1.272, subtracted it from the high at 11:30 in the morning, that would take it down into the low that was generated here at 2:30. Ben Bernanke, bounce day, farewell day, and that was that low of 34.15 out there. So it makes a nice 1.272 butterfly. Does it with what? A huge bullish engulfing candle, not small, but huge bullish engulfing candle. So now if we take the measurements off of that farewell day, that farewell time period here, out at the 34.15.25, we go all the way up to the highs right into New Year's Eve. I mean, it makes the high coming right into the close of New Year's Eve, gets up to 35.94.50. Really made it 35.94.75. If we go from the low, the Ben Bernanke low, all the way up to the, well, I guess got to give him credit, right? We got to call it the Ben Bernanke high out there on New Year's Eve. If we go from the low to the high, you'll find that on your retracement ruler, and you want to make sure you're using three retracement levels, 0.382, 0.618, 0.786. Well, you're welcome to use others, but I say at least use those three. 0.382. That number comes in at 35.26. Guess what? The low that was made here coming in at 5:30 this morning, 35.27. So even though the weak link out here, we do want to pay attention to this because these levels here, they act as floors on elevators. So the first stop, it's nothing really. So if we take a look at the damage that's been done truly off of that bounce out here, pretty much relatively mild. Very mild, because all we've seen thus far is a 0.382 retracement, a normal space, a normal stop, a normal area for price to actually stop at. If, in fact, this area fails at 35.26, I don't mean 35.25.50 or something like that, but truly fails, what we should see is price move all the way back down to 34.83, right around that range. Why? Because that's your 0.618 retracement. Now, why is it that we're covering the NASDAQ? Well, because the NASDAQ could be the one that would lead the market down here. You know, it has absolutely led the market up. So we want to be paying attention to the NASDAQ. Now, and when I say lead the market down, because if we go take a look at the Dow, let's take a look at the Dow. Dow has actually been much stronger than the NASDAQ if we take a look at its retracement level. If we come off of, you'll see a number of lines on my screen out here. Now, the Dow here actually gave us a topping pattern. Gave us a topping pattern when we had that price relative strength divergence. That means we had price moving higher, but the underlying component, the strength underneath the marketplace, wasn't there. We had a divergence. That divergence was confirmed when we had that little gap down as the market opened back up on Thursday. Last Thursday out there. So those of you that were away, market opens up on Thursday, gaps down. That's your reversal signal inside of the Dow. Well, it's inside all of them, quite frankly. But here, where we had that divergent pattern, well, that was your reversal signal. Now, if we go from the same low here, and what you'll see is that the low that actually came in on Uncle Ben Bernanke going away day, that was December the 18th out here. You didn't see a butterfly inside of the Dow like we did in the NASDAQ. So again, that also indicates that the NASDAQ, even at that stage, was weaker than the Dow. Instead, the Dow takes off, and we go from that low, which came in at about 15,749, all the way up to the high that was put in here on New Year's Eve. That came in at 16,539. If you go from that low to that high, the 0.382 retracement level, somewhere right around the 16,000. It's overlaying the primary trading range boundary. It looks like about 16,230, somewhere right around there. Look, the low that we have seen thus far, the low that came in at 330 this morning. No, I take that back. It's January 6th. The low that came in on January 3rd, that's the low that we've seen out here. That came in at 16,336. We're really well away from that. So you can see here that the Dow is stronger. So we want to be paying attention to, in my opinion, the Dow futures. We want to be paying attention to the NASDAQ futures. We want to see what happens if, in fact, the Dow makes a run for the high. We want to see what the NASDAQ is doing. Whereas if the NASDAQ cracks the 0.382 level, and starts moving lower, does that mean that the Dow futures, all that they're going to do is retracement? If we go from the high out here, that's coming in at the high again, being at 16,539, down to the low on January 3rd. What you'll see here as we begin this morning, as we truly begin, as folks are really coming back to work here, you'll see at the price level of 16,461. And we're traveling right now at 16,460, so we're there. We're there, all over it, baby. We're at the 0.618 retracement level. Is this, we'll have to see when the market opens here in about 13 minutes. Is this the extent of the move, or is it going to make a move up to that 16,496 level inside of the Dow? That's your 0.786, or is it going to actually make a run for the highs out there? I don't know the answer to that. I wish I did. If I knew the answer to that, I'd tell you what trade to put on right now. I don't know. What I do know is that we have some areas here for us to observe in order for us to really be able to determine what is the market's next move out here. So it's going to come, I say, let's go take a look at let's take a look at the ES Mini. Let's go see what it is doing on the 120-minute chart out here. And the ES Mini, if we take a look at that same low that we're going to use, that's that 230 low out here, makes a really nice Gartley buy pattern. And if you take a look at that, what does that Gartley buy pattern look like? That was a 0.786 Gartley buy pattern. This is the 120-minute chart. There, I got this pulled down here. There's your Gartley buy pattern. So if we go from that same low here, fewer lines, fewer horizontal lines on my screen, and on the ES Mini, that low came in at about 17.60.75, all the way up into New Year's Eve, makes a high out there at 18.46. One heck of a run out there. What you'll see, the 0.382 level, 18.13. The ES Mini has not made it back to that area. The low so far that we've seen coming in at 2 o'clock in the morning, that was on January 3rd, and that low out there at 18.20.50. Now, what the ES Mini is struggling to do is to get up and over the 1834 mark. It tried. In fact, Uncle Pen Bernanke kind of spoiled it on Friday when he came onto the air, because we saw a little bit of a bounce that was ensuing in the marketplace. Actually came on at 2 o'clock. It was this candle right here. It was closer to 4 o'clock, wasn't it? Yeah, about 3:30 to 4 o'clock out there. And that was when the ES Mini had gotten up to a high of about 1832 out here. We'll see if the ES Mini can make its 0.618 retracement. Right now, you can see, so the Dow here is stronger, right? Take a look at where the Dow has bounced to from its high to the recent low out here, and that was up at the 0.618 retracement. That level inside the ES Mini would have you at 1836 right now. You're only to 1831 and a quarter. 877-927-6648. Let's all stay warm, folks. You guys from the north even blew some cold air down here. We'll be right back.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. with the launch of TigerTV. TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzamento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Leading the charge, the upside this morning, dollar-wise here in the pre-market. You got Solar City Corp, SCTY. It closed out at $59.27. Last trade here firing off in the $65 range, so that's up a nice about $6 here this morning. Pandora Media just behind it closed, at $27.59. It's trading out at $29, so up a couple of bucks there. Oxygen Biotherapeutics, OXBT, is its ticker symbol. It's closed at $4.76. It's trading up $1 at about $5.80 or so. 3D Systems, Triple D, closed at $96.42. The last trade fired off at $97.10 out there. Now to the downside, leading the charge of the downside this morning, Twitter. That's trading out at $65. That's off $4 from Friday's close. Apple. It's trading out right now at $5.37, down about $3. It closed at $5.40.98. First Solar trading to the downside. It closed at $56.74, trading out at $54.25. Rio Tinto Mines, they closed at $55.11. They're trading out at $54.25. eBay as well, trading down a bit this morning. It last trade fired up at $52.41, down about $1 or so. It closed at $53.26, so maybe about 80 cents. Our call number is 877-927-6648. You know, we were taking a look at the 120-minute charts there for the ES Mini. for the Dow, for the NASDAQ, just help line up where we're at in the market, especially off of the large run that we have, the Santa Claus rally, whatever it is that you want to, take a look at. A heck of a nice run. So we wanted to first really take a look at, retracement levels, where are things at? But of course, what we also wanted to do is take a look at our friend, the Euro Japanese yen. That's our favorite currency pair because it helps us to understand directionally what is going on in the marketplace, or when there's divergences, where those divergences are, and what is likely to be the victorious chart to be paying attention to. And right now it is the Euro-Japanese yen. That's the Euro-Japanese yen. And again, we're looking at the 120-minute chart out here. As it has made its lows, really I would have to say from about the time frame of about 1 o'clock in the morning or so on January 3rd out there. It's made some lower lows out here. It's continued to push lower, but it's done it on less relative strength. Meaning that it's actually, it has not pushed lower with more weakness out here. It's actually saying, the push lower has not been real. Now, you wouldn't have known that last evening at the open. As the currency market opened, it did not take long for the Euro-Japanese yen to push lower. Nice wide-ranging bar. And so that's the level right now that it's trying to attack. That price point is at the 142.64 level. You're at 142.58. If, in fact, that currency pair... Now, what this is telling us is that the move lower wasn't real. I know I can get that out. When I say it wasn't real, hey, price is real, right? But it was just telling us that it didn't really have the energy in moving down. In fact, my clients and I was looking at potential short trades on Friday. And on Friday, I was looking at a 30-minute chart for the same currency pair, and just simply sent out a newsletter and said, you know what? No. There's a higher price where I can see a price bouncing to, where we might want to sell it. But when we take a look at the Euro-Japanese yen, its push lower was on higher relative strength out there. I said at some point in time it's going to matter. Maybe that some point in time is just about now. Of course, that's all going to depend upon whether or not this currency pair can, in fact, get over that downdraft bar from last evening. Because right now, that is your bearish engulfing candle. It's a biggie, and that high, again, is 142.64 out there. So that's what's going on inside that currency pair. Let's go see what's going on in the other currency pairs. Let's start off by taking a look at the euro, U.S. dollar. Let's look at the daily chart here. Boy, all kinds of diagonal lines, retracement lines on our screen out here. Right now, if we take a look at the retracement that we are looking at, and that's the one that's coming off of the low here, off of the rising price channel line, that's from November the 7th, all the way up to the high that was put in here on the trading session of December 27th out there. You'll see the price is really in between the 0.382 and 618. It looks to me like what the euro wants to do is come right back down and test the bottom of that rising price channel. Price range is probably going to be in the 135-ish range out here. 1.352 is your 0.618 retracement, but it could be a tad lower than that it moves to. But right now, we see if we take a look at these last two, this is a daily chart that we're looking at here, the last two trading sessions, nice wide-ranging bars of downside. We're not really seeing much of a reversal here. And the bar, if we go take a look at the 30-minute chart for the euro, U.S. dollar, let's go see what it is doing out here. See what this, just continues to make expansions to the downside. I don't see anything really special. What I do see is here's a pattern that I do see. Here's a sell pattern. The next sell pattern that could be setting up inside the euro is this A to B equals CD, which will set up your Gartley sell. It's probably a 0.618 Gartley sell, and it would look like this, folks, and take you right to about the it's a 0.786 Gartley sell, right around the 136.42 level. 877-927-6648. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
2014 has arrived, and Tom O'Brien has put together a special webinar for subscribers to his daily newsletter, Market Insights. That will be taking place the evening of Tuesday, January 7th from 6:30 till 7:30 p.m. All you have to do to attend this live event, which will be archived, is to be a subscriber to Tom's daily trading newsletter on the day of the webinar. Tom will be breaking down the three most important sectors that will shape the markets in 2014, the S&P, bonds, and real estate. Tom will provide his subscribers with a technical and fundamental take on these three sectors and how they can shape the entire market outlook for the upcoming year. For a limited time, we're extending a free trial to Tom's daily newsletter to a full 30 days. And even if you had the free trial previously, you're welcome to sign up and take advantage of the special offer, only good till January the 7th. Don't let another year pass you by. Sign up for your 30-day trial to Market Insights today and gain access to this exciting live webinar with Tom O'Brien. Visit the front page of TFNN.com today.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. We got the Dow up 51 points, trading out at 16,520. S&P up 5, it's trading out at 1836. Composite up 3 points, trading at 4134. Russell 2000 up 3.5 points, trading out at 1159. Apple back $6 and change. Netflix off $6 as well. Celgene Corp, CELG off $5. Twitter down $3.70. Select Comfort Systems, SCSS off $4. Auto Home down $3.71. Stratasys 3D Company off $3 and change. PetSmart down a couple of bucks. To the upside, Solar City up 7. Google's up $5 and change. Jinko Solar up $3. FedEx up $2.28. Container Store up $1.30. St. Jude Medical up a couple of bucks. Goldman Sachs was up. I lost it on my screen out here. Pandora Media up $1.60. Let's go back and take a look at the Euro US dollar. Now what I did was I expanded the chart out to a 120-minute chart out here. And, I can't tell you right now. It looks like the price channel that perhaps this is traveling this little descending price channels of the black diagonal lines that you're looking at. If you're watching us on Tiger TV, if you're listening on the radio or your mobile device at TFNN.mobi, thank you so much for doing that. What I'm doing here is I'm using as channel lines, I'm using the open and close, really. The open at about 10 o'clock in the morning on December 27th out here. I'm using the close of the bar at about 8 o'clock in the evening on December 30th, the open on the following bar as well. So it seems like that's the top of the rising price channel out there. If we take a look at right now, going from retracement of the high to the low that so far has been put in out here, you'll see that 0.382 retracement there is about $1.30, so 1.367 out there. So that is the type of bounce that you could see inside of the euro. Could see 1.367. Now, if we switch back over to that 30-minute chart out here, and I pull this back at 1.6387 out here is your 0.786 Gartley sell pattern. Now, what you'd like to do is you'd like to trade this in the direction of the trend. And right now, I would say if you're trading on a 30-minute chart, you'd be paying attention to the trend on the 120-minute chart. You just kind of multiply times 4. If you were trading daily, you'd want to understand what's going on in the 120-minute chart, certainly the weekly. But in this case here, right now, you've got a nice little potential sell pattern. Doesn't mean that's where it stops. Right around 136,387, and that is on the, and that's got a nice 1.618 expansion of your C to D swing point. And you really want to be able to measure. You really want to be measuring your A to B equals CD. That is so key during any kind of a Gartley or butterfly pattern. It's not just one thing to be able to draw the retracements, from swing point to swing point. In this case here, I'm using a swing point at 8 o'clock in the morning on January 3rd. On the euro, that came in at 136,580, all the way down to the low. That came in at 1:30 in the morning. That was on that was last night. That was this morning, I should say. That was out at 135.70 out here. So it's one thing to be able to draw the retracement, 618.786. You can certainly do the expansion work out here, but the real key now that's going to help us understand whether the 0.786 Gartley sell, if that's really, because if it hits that 136.38, 136.42 level, just because it hits that doesn't mean that's where it turns. That's where you really want to learn how to master that C to D leg to give you the information, the necessary information in order to go ahead and put on a trade out there. So that's what's going on inside of the euro on a daily, on a 120-minute, and on a 30-minute. I don't know if I can get any more comprehensive for you than that. Let's go check out the other currency pairs out here as long as we're in this area. You got the U.S. dollar, Japanese yen. Here's the monthly chart. Hits the 0.618 retracement dead on perfectly. And that's the retracement coming off of the high from June 30th, 2007, down to the low that was put in on October of 2011, the month of October. But I think more important in this chart pattern out here is the mere fact that what we saw was this currency pair go ahead and break its descending price channel. And that's the one that takes you all the way back to 1998. That's big. That's powerful. That's huge. So for price to actually pull back from the 0.618 area, it's where folks would normally get off of the elevator. So that makes a whole lot of sense. I would be looking to play this to the upside, not to the downside on any kind of nice pattern that might set up here. That is on the monthly chart for the U.S. dollar, Japanese yen. If we go take a look at the daily chart out here, let's see what's going on inside the daily chart. Boy, not a lot of give here. Not a lot of give as, in this currency pair, as you can see that really it's a daily chart. And if you take a look at Friday's action, it's pulled back, but at the end of its close, it moved higher. It's actually a hammer candle. I don't know if it's enough of a trend to really call that a hammer. I would have to say it's a questionable hammer out there. There's just not enough of a downtrend that was established. You had a key reversal session out here inside the U.S. dollar, Japanese yen. I'd say in the daily chart, the best signals come from when it actually gets above. That's your resistance level. That's your bearish engulfing key reversal session. And if you get a close above 105.43, on the U.S. dollar, Japanese yen, it's ready to continue its ascent higher out there. Let's go take a look at the Great British Pound. Let's go see what it is doing out here. Let's see what kind of time frame do I have on the chart. Here's the daily chart. But let's take a look at a longer-term chart. Now, the daily chart, before I switch over to a weekly or monthly, the daily chart looks like it's completed. Yeah, we're gonna say this has completed its measured move. Now, it does have an A to B equals CD up pattern that takes you beyond the measured move. It would take you up to the 16827 level. The measured move was nothing more than this little consolidation pattern out here, sideways consolidation pattern that began right around September 16th. Now, consolidations are the most difficult. It takes a little while for them to unfold. I can't tell you what kind of market is we're going to have in 2014. Trending markets are easy to trade. Sideways markets make it more difficult. What you want to do is you want to try to identify the sideways market as soon as you possibly can. In this case here, inside of the Great British Pound, it gave you that signal, in my opinion, right down around the trading session of October 16th. So I would have to say between the time period of September 16th to October 16th, one full month is really what it took for it to kind of identify for us that it was a sideways consolidation. If I move this all the way over here, and you saw this, at this stage here, you don't know that it's a consolidation pattern, but as you start pulling it back here to the left and you see that it holds price, gives you this nice big wide-ranging bar here, and then price gets up to the top and stops. Boy, it really tells you, it really confirms that here on October the 25th. It's a daily chart out there. So consolidation patterns can last a while. Now, the key about a consolidation pattern is whichever way it breaks, the odds are, and it's substantial odds, are that price is going to move equal to or greater than the actual consolidation level. In this case here, inside of the Great British Pound U.S. dollar, that's in essence what it really did as it made this high back here on the trading session of January 2nd out there. Pulled back. Right now, what we can see here is really just maybe consolidating sideways after that breakout, but it does have this A to B equals C to up that still could take it to higher price right around 168.30. Let's see what the longer-term chart looks like on the Great British Pound out here. And the Great British Pound, and this is a beauty. This is why you want. Let me do this here. It makes it a little bit easier for you to look at on my screen. Actually, it'll make it easier for me to look at on my screen. Let's move it over. So when we take a look at the Great British Pound, and that's why you want to make sure whenever you're trading, you're looking at a time frame that's above, you're taking a look at a time frame that is below out there. And if we take a look at that, you can see that this has been in a very long-term consolidation, sideways consolidation. Really, that consolidation pattern began going back on January 29, 2010. It's the weekly chart that we're looking at. So it's been in a consolidation range here for, a good 4 years? January 2010, 11, 12, 13, 4 years. A 4-year sideways consolidation. You're up at the top of that consolidation level. So the beauty here of this trading, the way that the Great British Pound here is trading. We may have seen the highs here. When we now take a look at the weekly chart, has not been able to get up over that consolidation level. In fact, on the weekly chart, you set up a night, it's not really a shooting star. That body is too long out here for that to be a shooting star, but we do see resistance. Now, the cool thing is that if this actually breaks out, so if it breaks out above, the area here for the consolidation, and there's a couple areas that you got to pay attention to. Number one is the high of January 22nd, 164.57. A close above that says, hey, this thing truly may be consolidating. We'll know for sure when it gets above the bearish engulfing candle that was formed on the week of May 6, 2011, and that high out there about 167.37 out here. Boy, if the Great British Pound gets above that, it's telling you that it's going higher, and the U.S. dollar is getting weaker out here. So we've seen the futures here sell off this morning. Let's go check back in on those charts that we were looking at, the 120-minute charts. Remember, I said it's the NASDAQ, so we took a look at the, let's not look at the Euro-US dollar. Let's go take a look at both those charts, try to put them here side by side. So it was the Dow that we were looking at, and it's the 120-minute chart that we were looking in on. What we were noticing was that the Dow, which has been the strongest, had made the 0.618 retracement level, and we know that the NASDAQ had only made that 0.382 retracement. What we said here was it will be the NASDAQ that will likely give us a signal to lead us down. If it can break that 0.382 level, 35.2618, it's a 120-minute chart, so we've got some time here left on this trading session, but what we can see here thus far right now is, in fact, it is now down below the 0.382 retracement level. What happened to the Dow futures? Let me pull this back here. Let me see if it actually formed a buy-sell pattern out here. Well, that's one thing I did not do, which was take a look at our little Gartley tool and see what was occurring as was making this 0.618 retracement level. Yeah, how about that? So what it actually was doing My apologies for not having actually caught that, but it was making a 0.618 Gertley sell pattern. Now you've got here on the 120-minute chart, you've got confirmation. Now, not only was it a 0.618 retracement, not only was it a Gertley sell pattern, you also had the 1.272 expansion of its B to C leg out there. Now, let's see if it actually completed the A to B equals CD, or if it was just a little bit shy of that. Let's see here. Yeah, a little bit shy. 16,483 would have been your 1-to-1, but nonetheless, you got to respect the Fibonacci numbers, and remember, we're using these as guidelines, not as the exact numbers here, but this is going to be important. I think that today's session, I think, is perhaps one of the most important for the year, because we saw that quick sell-off as we came back into January 2nd out here last Thursday. You know, Friday was kind of a so-so day, and there are certain levels that we really want to be paying attention to in order to be able to try to capture a change in trend in the market. Hey, if this is a long-term change in trend, if it is, and that takes a little bit longer to work, if this is a long-term change in trend, well, then, you know, we're really not that far from the highs. You're at 16,409 in the futures, and the high out there coming in New Year's Eve, 16,540. So, you know, 140 points inside the Dow. If this is a major top, not that big of a, you know, you're really not that far off of being able to sell that high. So here is the first point. Here's the first Gertley pattern, and so we've got a confirmation. It's a 120-minute chart. Let's go switch over to a. Let's go switch this to a 30-minute chart out here. Give me a moment to do that. YM pounds. Let me just go take a look at the current contract out here. H4. And let's go convert this to a 30-minute chart. Give me a moment for doing that out here. Here we go. Let's get rid of some of the stuff. Data points on this. Clean this up a bit. Delete everything. Get rid of the volume. I don't want to really pay attention to the volume here just yet. Close that out. Okay, so now why was I doing this? Excellent question. I've even confused the heck out of myself. Well, here we see here we most certainly see the Gertley sell pattern out here. It's a 30-minute chart because we're looking for, on this 30-minute chart, what we want to see is we want to see this bearish engulfing. It's a biggie. There's a big bearish engulfing candle that has formed here as we speak right now. So it's a pretty, now what you could be seeing here is the play out of the A to B equals CD down inside of the Dow. Now let's go take a look at what that looks like. We're going to come off of the highs here from New Year's Eve all the way down to low that was put in at 2 o'clock in the morning. That was on January 3rd. And now we're going to use the C point as we were coming on there, that 0.618 level. Now what I'm going to do here is I'm going to get rid of, now I'll leave the Gertley sell. But you see this wide-ranging bar coming off that C point. So what this tells us, if this is the, if this truly is the beginning of a change in trend to the downside, we're going to see the Dow, it's at 16,407 right now. We're going to see the Dow make its way down to 16,268. But perhaps beyond that, quite frankly, because of this wide-ranging bar. If during this next 12 minutes, it's 9:48 a.m. If during this next 12 minutes here, we do not see any kind of reversal of this bar, that is telling us that probably 16,212. Now, let's go back. Again, it's a 30-minute chart, and let's go back to Uncle Ben Day. Let's always keep this in perspective out here. Remember, this is a market here that everyone has been rewarded for buying dips. I'm grabbing the wrong tool out here. And so the cool thing, in my opinion, with regard to this market and why you want to just make sure you get the signals here correct is that because if this is a change in trend, there's going to be buyers out here. The VIX index, quite frankly, was trading below its 50-day exponential moving average as of Friday. Right now, as I take a look at the VIX index, it's up just slightly. It's up 21 cents, trading out at 13.97. So there's going to be plenty of dip buying. There's going to be plenty of these Gertley sell patterns that will form out here. The 0.382 retracement level looks like that's really where this Gertley sell, which is certainly coming to fruition here, would be taking price to inside the Dow futures. And that's in that 16,238-ish range. So I would say the target now for the Dow, 16,212 to 16,268, somewhere right inside there is where the Dow futures ought to head to based on the sell patterns that it has given here for us this morning. So hopefully that's been helpful to you. And just simply how we take a look at the markets, how we let the market communicate to us what it is doing. Right now, we've got the Dow is only off 2 points, but you know more about the Dow and what it's doing than pretty much nearly everybody else out there. And that is a beautiful thing. 877-927-6648. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Flat market out here as we speak. The Dow is off about $1. The S&P is up 50 cents. Composite, though, that's the struggling index. It's down $9. The Russell 2000 It's down $1.80, so not too shabby out here. Apple struggling this morning, actually slipping into sell mode out here, both on the Rhodes momentum indicator, as well as we take a look here at Apple. It formed this little hammer candle. Now, I mentioned the trading session when we took a look at it. That was back on December 18th. That hammer candle, we looked at it on the following session. I said that's a very suspect hammer candle. Why is it suspect? Why was that hammer candle suspect? Well, the reason is because it really was a gap down. So you have really kind of like two competing Japanese candlestick patterns that are out there. You've got the gap down. That took place because if you take a look at the close here, the low of the trading session on December 17th, the low there was 553. The very high of that very next session was 551.45 out there. So you get a gap, and yes, it formed a hammer candle. But remember, when you are trading, when you're taking a look at candlesticks, if you do use Japanese candlesticks, and you really should, because it's where the bulls and bears are giving you all kinds of market signals out here. You want to make sure that you're accounting for gaps out here, and when you account for the gap, there's no way that this really was a hammer candle out here. Nonetheless, we also saw was we saw Apple trade sideways for 2 additional trading days after that candle, and then it gapped up. So it really created this little island here. And to me, that's what's more important. If Apple, in fact, closes below the low of December 18th, that low out there is 538.80. That will be extremely bearish. It'll be extremely bearish because you had really a very bullish candlestick pattern out here that would have failed. And that's that little island reversal. Likewise, and it works the same way when we take a look at the New York Stock Exchange. When we go over and we take a look at the NYSE, that's got an island reversal top at its all-time highs out here. In this case here, that was a 3-day trading session. That was a trading session from December 30th, because December 30th, the high was 10,361.37. The low of the very next session, we had a gap up. The low is 10,366.58, so you got a $4 gap there. And then on January 2nd, when the markets open back up, it gaps down. So you've got an island reversal. You have stranded passengers out there. If that island reversal gets taken out to the upside, well, that's going to tell us that not only is that bullish, but what will have happened on the monthly chart, what will have happened on the weekly chart, is that you will have rejected the swing point high from October of 2007 to the upside, is what I mean when I say when it would have rejected that, area out here. So as we take a look, so that's going to be very key for us to be paying attention to on this island reversal here for the New York Stock Exchange, just like it is inside as we take a look at that Apple chart on the daily chart as well. So there we've got a couple of competing patterns. So right now the Dow is up 9 points, S&P is up 65 cents. We've got the patterns to be paying attention to on the 120-minute charts, on the 30-minute chart for the futures out there. We didn't take a look at Goldilocks and silver. We'll do that during the next hour. Gold right now is trading up about $4, I believe, about $5. So trading out at $12.44. Silver up 7 pennies. It's trading at $20.29 here. Light sweet crude is flat, trading at 93.99, and leading the charge the upside. Solar City up $7 and change. We'll take a look at that stock chart. Leading the charge the downside. The trend has changed in Priceline. So Priceline here trading out 1123.36. It's off on 9 points. Folks, if you're off to start your Monday, be safe out there. Stay warm. It's frigid throughout most of the country. And, of course, it's always warm here at TFNN. So have a great Monday. I will look forward to seeing you in a few minutes. Have a great day. Take care. Bye-bye now. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.